So you're probably thinking about opening a whole life insurance policy. You are probably doing it for the living benefit, not so much for the death benefit. And maybe one of the concepts you're using is the infinite banking, or maybe the bank on yourself, or maybe using it for retirement or for college education. And I'm all about all those strategies. I love them all, but I just want to make sure that you're getting the right policy. After all, this is a long-term commitment. You're probably putting a lot of money into it. So let's just make sure that you're getting the best policy possible. I want to give you some tips and some red flags that you should be looking at. So red flag number one, the illustration shows zero or very little cash value in the first year. So if you see the illustration that your agent sent you, you see the column that says total net cash value, or maybe it says surrender value. Look at that column, look at the first year. If the cash value is 50% or less of the premium that you're paying into the policy, maybe the policy was not structured correctly. Number two, your whole life policy shows the same death benefit throughout the years. Now, I know that we're not doing this for the death benefit, we're doing it for the living benefit, but this is important because if that is happening, it's telling me that you're probably not doing business with the right life insurance company, or maybe you don't have the right writers in place. Number three, your break-even point takes place in 10 or more years. If that's the case, the policy is not performing really well. So for example, if you're paying $10,000 premium, just to keep it simple, look in 10 years, what is the cash value? If the cash value is $100,000 or less, the policy is not performing well. It hasn't been structured correctly. You should be able to break even in 5, 6, 7 years, maybe 8 at the most. More than 8 years to me is too long to wait. And number four, if the cash value growth is less than 4% after breaking even. So again, go to your illustration. The first thing that you want to see is when you're breaking even. If it's in, let's say, in 7 years, okay, after 7 years, what is the growth that the policy itself is giving you without using, your policy as your own bank or anything like that? Just how much the policy is growing by itself. If it's 4% or less, it's probably not the right company, or it hasn't been structured correctly. So if you see one of those red flags or more, you are more than welcome to send me that illustration. We can revise it together, or I can give you my thoughts about it, or I can also send you an illustration back of what I will do or how I will structure the policy for you. By the grace of God, we have been one of the best, if not the best, at structuring whole life insurance policies for cash accumulation purposes. So you can give us a try. I can send you that illustration to you. If you like it, great. If not, no problem. I hope you can give us a try. And thank you so much for watching this video. God bless you.